Hello world. No, I'm just kidding. Alright, so this is the first video I'm gonna do for you guys for the daily breakdowns of the market. If you guys don't like it, fuck y'all. No, I'm just kidding. But I'm not saying this is the right way, but this is just the way I see the market. There's so many different ways to see the market where, you know, if someone could say the complete opposite of what I'm saying and they can be right. Either way, let me give you guys my breakdown so you guys can kind of understand the way I think, the way I trade. It'll really help you guys, in my opinion. So, first of all, we're diving in today. So today, let me just pull this thing out real quick. So the start of today, or the way I trade, I guess I'd say, is I trade solely the New York session, which you guys should trade as well. You can trade the London session. I don't know if you see these colors right here. So this is how I separate the sessions. So the start of this gray one is the start of London session. So this opens up around I think 9 our time. Let me see. So 3 o'clock our time really, or four? Is it four? So basically 12 o'clock our time, 12 a.m. So that's what time this one starts. So I mean it's kind of hard to trade these because it's super late. So a lot of people don't in the U.S. especially don't trade London session, but there are people who do. So the beginning of this blue line, that's the beginning of the New York session, and then this other blue line right here is afternoon session. So it's still New York session, but this is basically there's lunchtime in trading. Trading lunchtime happens between 12 and 1, but our time it's between 9 and 10 because obviously we're on this. I have my times right here on the bottom set for New York time because everything is run off New York time. The way the price executes, the way the market moves, it's really solely moves because you'll hear people talking about um, like New York session really only. So I just suggest having it sit on New York time because I've done both. I've done our time and I try to make it work, but it's just easier to have New York time. But so starting into the day, if we go into the daily, you guys will learn this eventually. But if you guys see this gap right here, you see how there's a space between these two candles right here. It's blank right here as well. These spaces tend to get filled. It can take a couple. Who knows how long it can take, but it can take time. But I had this marked out for for a couple of weeks or since it first happened. So around 15th of November on Friday. You guys can see the day right here on the bottom. If you guys see that right here. But so if you look back, a lot of these spaces will always get filled because these are just they're volume imbalances. Like you guys will learn it eventually, but I don't use them too often. Really, only on the higher time frames, like the dailies, weeklies, or 4 hour. But so you see the space right here, the space. It got filled by this candle right here, and these spaces will always get filled. You'll see them pretty consistently, but they'll get filled majority of the time. See right here, space right here got filled by this candle. This space right here got filled by this candle. If you see this space right here, it's like kind of like a double volume imbalance. It took a little bit of time, but it got filled. And when I say filled, you don't want to see like this wick right here. So say if we're on this exact time, let me just take these off. You see this wick? This is not a fill. So price basically opened up right here, went down, did this thing, went all the way fuck, went all the way up here, and then went all the way back down here. And then this is basically like price still went up here, but you want to see it close above these because then that's when it gets filled. So this is basically this range of this candle. These lines right here, this bottom wick, this is where price reached, and then this top wick is where price reached. So this day, this is the bottom of price, and this is the top of price. But price opened up right here. It's kind of complicated, but you guys will learn it in those videos that you guys should be watching. But so wicks wicks do the damage, bodies tell the stories. So obviously the body is this part. The body is this only solely. So this white part only is this holy part. This is the wick. So price took. Well, I'm not gonna do this day, but just to explain to you guys the volume imbalance. But so I kind of figured price was gonna come up here. I it didn't fill it, so I'm price might just reverse back up, or it could not. It could want to fill this spot. Who knows? Maybe next month. You know what I mean? because you never really know. The thing about the market is you never know. The market does what the market wants to do. But yeah. So I had a feeling price was gonna come back up here. So this is today. This black candle right here is today. So I had a feeling price was gonna come up here, and to just make it a little more complicated, just to confuse you guys a little more, even though I'm not intentionally trying to confuse you guys. There was the SMT divergence. So you guys probably do not know what that is yet. You guys are like, what the fuck? But so in the market, there's two currencies or two. Yeah, I'm pretty sure you guys heard of Nasdaq and S&P. They basically move exactly the same, but one's cheaper and one's more expensive. If you guys heard 20, this like Nasdaq right now is 20,000 and ES is 6,000. So I'm gonna call Nasdaq NQ and ES or uh, S&P ES. But so you can see how there's a divergence. So we use divergences to tell when market structure will change or um or reverse. So it's called a smart money technique. So again, the concepts we trade is called smart money. So basically, we like to trade along with the banks. So we like to trade because the banks are the big movers of the market. So the banks are flooding millions and millions in the market per day. Like us retail traders, people like me, people who trade just like me, whoever, we're retail traders. We're the small fish. You know what I mean? We don't really matter. The big banks, we move along with big banks just because it's you can get better movements, more powerful movements, and it's just how I like to trade. Again, there's millions. I'm not gonna say millions, but there's so many different ways to trade that it's basically like not one way is wrong. Like I said, there's someone who could trade opposite of me, and they make more. You know what I mean? Like it's just there's so many different ways to trade. Like especially within smart money concepts and ICT. He said himself there's like 81 different ways to trade, but that's obviously way too many. You don't want to use that much. So I really simplified mine, and I think around I use around probably six tools within it. But one of them is a smart money divergence, or I mean SMT, smart money technique. So you can see how price. So let me just move this real quick, just to not confuse you guys. So this thing right here. So I don't know if you guys see that line moving on both sides of my screen. See my mouse and see how there's two lines going across. So this candle right here, this top of the wick, is this top of the wick right here. So you can see how price didn't take on Nasdaq. Price didn't take this high. Like price never went up here. So basically, I'm gonna explain this shit like you guys are 5 years old, even though you guys might understand. So if you guys, I'm sorry if I'm an over explainer. Just deal with it. But so basically, price didn't come up here like how this one did. You can see how price took this high. So this is on a bigger time frame, like the 4 hour. So this is a pretty big confluence because you can tell that price is gonna reverse. So BSL means buy side liquidity, and this is buy side liquidity as well because we trade within the ranges. So liquidity, liquidity, liquidity. Like every single low is liquidity. This is liquidity. This is liquidity. So basically, people who are in trades have their stop losses right here. So whoever like is in this trade, say this person wanted to take this trade to this liquidity point, but it never did, and then it would just reverse all the way back and take them out. So that's basically liquidity. Liquidity is other people's money. So obviously the way the market moves, or especially the banks, they want to take our money and then do exactly what we thought it was gonna do, but take our money first. You know what I mean? It's a fool's game. You know what I mean? We're people. This is how people lose. The market is against us. It's not with us. But yeah. So again, you can see how this is what I was thinking about into the day. So I seen that this obviously had an SMT divergence. So I seen that again. This is a huge sign that price is gonna reverse. So I had that mark like that, and yeah. So obviously you couldn't get like the market has been moving too clean lately. Like if you look, you can still catch trades since we trade like the lower time frames. Um, like this doesn't look good. You know what I mean? Like this doesn't look good. Like it's wiki. Like we want price movement that's clean. Like you know what I mean? We want healthy movements. Like this is healthy movement. Up, down. Clear like clear market structure. But again, you can still catch a trade on there because I've caught like I think like 4 winning trades within this whole entire range. But so yeah. So going to the morning, 9 o'clock. So I'm gonna just put this line. So this line right here is the morning. This is when we're looking at this at the session. So I'm just reverse. So this is 9 o'clock. So what you want to do is look at market structure again. Like I said, the market moves in like a staircase. So this is basically the fundamentals of the market. It's either like this, up, down, up, down, up, down, or it's either like down, up, down, up, down, up. This is the basic fundamentals of the market. The trend is your friend. That's a good note you guys should take. The trend is your friend. If you're always trying to catch, say if I'm trying to like, say within this range, we're in an obvious uptrend. You know what I mean? We're on a staircase up. Like this is how you can tell. And if I'm trying to sell, I don't know if you guys know this, but you can make money on the market going down. So say if I'm trying to bet on the market going down, say taking out one of these lows, like you gotta obviously have more confluence. Confluence means like basically the market's showing you its edge. The market's showing you what it wants to do. But if I'm trying to short in an uptrend, I'm gonna get smacked. I'm gonna lose my trade easily because I'm fighting what the market wants to do. You're not supposed to fight what the market wants to do. You're just riding the market out. You know what I mean? You're never controlling the market. The market's controlling you. So yeah. So obviously you don't want to do this, and you don't want to have a buy when we're on a downtrend. I mean, you can. There's obviously times there's times where you can catch this move up right here and then get out. But again, like the majority of the time, you want to go along with the trend. Um, so yeah, so this is basically the two fundamental ways the market moves. I'm pretty sure you guys will learn this when you guys will see the videos. But you want to go along with the market, like you want to catch a trade. So I don't know if you guys know what this is, but this box right here, this green and red box, this is basically like a trade. So when you're trading, this is your see the bottom of this bottom of this red box. That's your stop loss. So say if I'm risking $500 and it hits the bottom of this, I lose $500. And say if I'm risking, say if I'm trying to get up here, and up here if I'm trying to make 500 turn to 1,000, so basically 1 to 2 risk to reward, um, I'm gonna I'm gonna go with the trend. You know what I mean? Like I'm gonna go with the trend because the trend is your friend. There's a lot of banks and institutionals, they preach that, but um, yeah. So you obviously want to go with the trend, and you want to short along the trend. And also, there's another way the market moves. It's just kind of basically consolidation. So basically, price will just be like going sideways, doing some weird shit. This we don't want to trade in conditions like these. Like not at all. You can still catch trades, but me personally, you always want to go for the highest probability trades. You don't ever want to trade when the market's like risky. You know what I mean? You want to know when the market's in good conditions. Exactly when you're playing basketball. You know what I mean? You want to trade, or in the basketball, you want to shoot when you're open. You want to shoot when you feel good. You want to shoot, or you want to hit a layup when there's no one around you. You know what I mean? Those are high probability layups. Say if I'm trying to go for a layup and there's a guy under the basket, and there's two guys under the basket and there's a guy right behind me. Those are low probability like chances. You want to kick that out and get an assist. Hit someone on the wing, hit a 3 pointer. But when the basket's wide open, that's obviously high probability. You know what I mean? That's how we decipher between what we want to do within the market. So luckily the market was moving clean because we have a confluence SMT. So now I'm pretty confident. So once there's a SMT as well, you want to see this high get protected. This one or this one. I use kind of both, but I like to use this one. But both are kind of protected. You don't want to see these highs get touched. So say for in this instance, I seen there's SMT right here. So then that means this high becomes protected, meaning you don't want to see this. You don't want to see this market come up here. You don't want to see it do this and smack this high, then whatever it wants to do. But yeah. So a good. That's why I like to use protected because once you know this SMT, then it becomes protected, and then you can just easily set a trade and just be like, all right, now I'm confident that the market's gonna go past up here, so I'm gonna put my stop loss right here, and then I'm gonna target, whoever 1 to 2 risk to reward, 1 to 3. So basically, if you guys don't know risk to reward, if you guys see it here, risk to reward, this is a 3.26. So say if it was just a plain three, I'm racing Say if we're going with 1,000 risk. Say if I'm racing 1,000 on this trade, I'm gonna make 3,000. That's how you want to trade. You don't want to risk 1 to 1 because then eventually it's just you're gonna be stagnant. Like say if I'm risking 1,000, make 1,000, and I win a trade, and then you lose the next one, I'm break even. But if I had a 1 to 2, I made 2,000, and now if I lose, I'm still up 1,000. Or say if it's 1 to 3, you know what I mean? Just do the math. But so yeah, so this is how I see the market. So this was this morning. So also you want to see what the market is delivering off of. So delivering means like what is the market reacting to. So you can kind of see that you guys don't know what this is, but there's a fair value gap right here, basically an imbalance. So you guys see this gap. You guys see this gap right here. See how it's just straight black candle in this area? You're not looking at these candles in the back. You're only looking between one, two, three. So just to make it easier, one. I don't think you can see that one. What the fuck? So two. Why does it look so shitty? Oh no, they do. So this is candle two. One. Where is it going? They just disappeared. Whatever. All right. So basically, only looking at three candles. Just three candles. Just these three. So one, two, three. I'm trying to mark it out, but it's fucking up. But so that's how you notice when there's a gap. So if you see right here, there's a space between it, and price likes to react to them. You can see right here, react. There's a one, two, three, and there's a gap right here. See how price just perfectly worked it and reacted low. So once you see kind of stuff like that, um, you can kind of tell what price wants to do in the morning. Because time is all fractal. If I'm on the daily, or say like if I go all the way back here, like this is from, you know, a week ago. Like it doesn't make sense to look all the way back here to catch a trade over here. You know what I mean? So you want to stay within like the week of whatever price action is doing, or maybe within the day, depending on how you trade. But for me personally, I trade on the 1 minute. So I'm not gonna be looking at what happened last week to know what happened on the 1 minute because that's it's too far. So yeah, so I see price fracted off this one right here, and I see price fracted off this one right here. So you can see basically price is now in a downtrend. If you guys can't notice this, I think this will help you. So see this? So up, down. Let's delete this. So basically up, down, up, down, and up. And obviously, again, the trend is your friend. When you're in the market, you want to catch it with the trend. So again, you can just, if you really want to, you can just catch a trade right here, then aim for whatever your target is. But again, so now we know that like it gets confusing because like you guys have to watch those videos. There's basically a reverse pattern within the market that you have to pay attention to. So say for an uptrend, and you're like, how do I know when the market's gonna start going down? The way you can tell is when the market breaks the low. Then it's pretty. That doesn't look good. I don't like that. I'll do this one. So up, down, up, down, up, down, up, down, up, and then it breaks this low. So this right here is also another bread and butter of what how I trade and how you guys should trade. This exact pattern right here, because price is basically this is the first sign ever that price is gonna reverse. So if you can see how price is not breaking any of these lows. You see how price did not break this low at all. So it just went. It's breaking this high. So that's how you know. And then it didn't. Price didn't come down to this low. Price didn't come down to this low. Hold on. And then you can see price finally broke a low. So that's what we call a break of structure, a market structure shift, or a change of character. When you guys watch Lucas, he'll explain that a lot better. But basically, this is our first sign that the market's gonna reverse. And then once it reverses, that's how you know when a trend changes. So then you know that basically price is to whatever target you think it's gonna go to. But so yeah. So back to the candle. So you can kind of tell right here. This is where the pattern was at. So you see here up, down, up. Price broke this low, and it changed the state in delivery. Basically, change the state of delivery is like a change in pattern, I guess you could say. Again, you guys will learn a lot of this later, but I'm just trying to get you guys accustomed to the basics. But yeah, so you can see price hit this. When we go to the candles, well, the candles get kind of confusing because you're not understanding, or not that you're not understanding, but it's just harder to read, cause especially if you guys are new. But you kind of see up, down, up, down. It broke this lower here within this group, and then you can tell that price wanted to go down. So price didn't really give me a chance to answer today because price was already like dropped hell, like far as fuck within the day. But you kind of see that we have all these lows. So this low, this low, this low. That's how you target trades when you're in a model. So you're targeting these lows, or say you can target like gaps, the fair value gaps right here. But yeah. So another point of interest you can check is double lows. So see how these lows, this one right here, and this one right here. If I put the line, they're basically identical. They basically touch the same spot and they never broke through. So markets is going to want to hit these, take these out, because there's a lot of liquidity right here. Because people trade, like say retail traders, they'll like see, oh shit, prices are reacting off this level, so let me just, you know, buy here and target wherever I want to target. But you can tell that price just shot through that because it's like it reacted with force, a lot of force. This is a big force candle because price is gonna hunt these points. But all right, so let's go down to the 15 minute. So again, this is pre-market. This is 8:30, so this is 5:30 our time. I like to trade after 9:30. You can trade 8:30 if you want, if you have a strategy to it, but I don't like to do it too much because it's just not my style. But the bigger moves really happen during New York Open and New York session, so around 9:30 to like 11, 11:30. So those when our trades happen. So between 6:30 to 8:30 our time. Like that's our key window when we want to trade. But so you can see that this is the 1 hour for value gap. If you guys remember, because if you guys see it here, up here, these are so basically every candle of this means an hour. So this is an hour, this is an hour, this is an hour, this is an hour, this is an hour. Then we drop down to the 15 minute. Every candle becomes 15 minutes. So 15 minute, 15, 15, 15. This is where it gets kind of complicated because you kind of gotta. It's a lot of information. So that's why you always use your bigger time frames to understand direction. So if I'm right here on the 1 hour, I'm always trying to tell direction where the market direction means where the market's gonna go on the 1 hour. So right here, the 1 hour, I can tell that the market's going on a downtrend now. So I have a feeling that price is gonna take out all these lows because there's a lot of liquidity. If you guys see, look at all these lows. This a lot of liquidity basically means like there's a whole bunch of fucking lows. So if you look at all these lows, I'm gonna mark them out for you. This is where all price can go. So that means there's a lot of liquidity down here. Cause look at all these. There's not a lot of times where you see the market do this. Cause if I go back, like look on this down move. The only points of liquidity are really right here and like maybe right here. These are small points of liquidity I wouldn't really use because it's really small. It has to be obvious. Like that's the thing. You can't be forcing shit to make sense when it's just like you just gotta ignore the shit. Right here you can see like there's not a lot of lows right here. There's only like one group of lows right here. One, this low got taken out by this low. Two, like three. Again, like I said, I don't really count small lows. This is kind of good size low, I guess, but um, this one has a lot, like you can tell. So when I'm looking at this, I'm like, all right, this is very obvious that price is going on the downtrend. So if you were right here, this is exactly when I'm going to trade. So you guys will learn premium versus discount as well. So and OTE. So OTE means optimal trade entry. You guys could write that down too if you guys are taking notes. I don't know if you guys are, but you guys should. OTE basically means optimal trade entry. So when you're on the bigger time frame, you want to look. You don't want to buy, or you don't want to sell high. I mean sell low. So let's use this in a shirt formation. So say if I bought a T-shirt for the middle, $5. I don't want to sell it when it's $2. You know what I mean? I want to sell when I make a profit. I want to sell at $8 right here, and say this is $10. So $0, $5, $10. If you guys know what I'm talking about, we'll say, where's my drawing? We'll say that's $10, $5, $0. I know it looks kind of shitty, but again, you want to sell at the highest thing you can. Again, I'm not gonna wait till it comes up here because like optimal trade entry is optimal trade entry. Like obviously you can wait for a sell up here, but it's a lot of the time the market's gonna tell you what it wants to do. So again, if I bought a shirt at $5, I want to sell high. I don't want to sell low. Basic economics, basic whatever you want to call that shit, but it's basic how everything works. You don't ever want to sell low, or you don't ever want to buy high, because if you buy up here, say if I bought a shirt for $5, or say if I'm willing to buy a shirt at $5 right here, or fuck, how do I explain this? All right, so say if I want to buy a shirt, again, I don't want to buy when it's up here. I want to buy when it's down here. But in this instance, it doesn't really matter because we're going down. So it's like the opposite. But again, so you see this right here. Price is reacting off this fair value gap, which is fair value gap basically means what's fair value gap? It's just like an imbalance within the market. Again, see this big space right here? There's no wicks, so I can see right here. So see how there's a gap right here between these two. You're looking at the ends of the box, the top and the bottom. See how there's nothing right here? It's just straight white candle. An example of what a gap wouldn't be is this right here. See how there's like no space between here? There's no space. The wicks is covering the whole bodies. So when I say wicks, you're looking at these lines right here. This line and this line. See how there's no space compared to this one? How there's space? So imagine if this wick. No, you can't see it. One. So say it was like that, then this would have been like this. Then say if price went up here, then boom, there's no more gap. You know what I mean? Then the gap's gone. Exactly how this one is. So that's just to explain to you how a gap is. And say if this candle got up here, then the gap would be at the bottom of this wick and the top of that wick. So you kind of see this wick is kind of small, but it still works. And you can see price probably rejected off it. See how price right here rejected off it, but we're not paying attention to that. So again, price on the 1 hour. I always put the time frame, what kind of time frame it is, because again, we're using a higher time frame. Price is reacting off this gap. It reacted really nice. Price went all the way up here, and it closed down here. That means this is a weak candle. You guys will learn that. But let's drop down to the 1 minute. So you can see right here. Then you do the same thing you did again. You're waiting for price to give you a sign that it wants to go down. So if you see right here, price is going up, up, down, up, down, up, down. What does that mean? Uptrend, right? So then you're waiting for one of these lows to get taken. So people might get confused because they'll see like see how this is up, down, down. This is people like say if you guys have a question about this, you guys why did this low make the shift to go down? Like basically saying like why didn't this be the thing to start making the price to go down? It's just because this high is not protected. You're looking for protected highs. Protected highs basically mean like the real structure. There's a bunch of noise between everything. You're basically looking for the real structure. So this is the real high. Let's see if this took right here. So again, you're waiting for whatever. See how this high broke this high? That means whatever this point ends, this is the protected high because this took out this high. So if you're looking right here, see how this high broke this high? So that means this is the protected low. Again, it's kind of confusing, but you're going to have to watch those videos I sent you guys because then it'll make a lot more sense. You guys can watch those videos to come back to this one, and it might help out. But it's because this is not the protected high. Protected highs are only the highs that break these points. But as you can see, this high is now protected because this high broke it. So now what becomes the protected low? This low right here. Because again, this is the protected high. So whenever we're in an uptrend and say price takes a high, then that's it right there. Might not make sense. I hope it does, but fuck it, we'll see. So again, we're going back to regular candles. So then, or we'll go back to this. So then you see how this low finally got taken, and then it protected it then started the market structure shift to go down. This is the consolidation I was telling you guys about. There's sometimes a lot of noise where it's not really clear. You guys just kind of got to figure out a way. But as you can see, like it started the downtrend, up, down, broke this low. Now it's starting to go down. A little consolidation, then boom, it broke down with more force. When you see a low get broken with a lot of force like this, that gives you confidence in that that you understand the direction where it's going. So then boom, up, down. So let's say this was New York Open. How could you have caught this trade? So first of all, let's go again. We're not going to forget about this one about ES. Where is it? Again, there's a lot of noise. It's confusing. It's going to be confusing. So you can see again, there's another smart money divergence or smart money technique. So between this high and this high. So what does that mean? Boom. One of these highs should be protected. Meaning this one or this one, whichever one you want to use. It's more probable that this high will be protected. But when you're on a 1 minute, these are all 1 minute candles. So you gotta be quick on your feet. You gotta understand what's going on. You gotta be ready. So I usually use both, but most of the time I use this high, and look, it never got hit. So you see, there's a SMT right here. So between this one, again, if you guys look at the white lines on both sides, it's like that. It's like a mirror. So my mouse on the right side, this is this high, and that's the same high as this one because it's the same time. Let me move this thing right here. So if you look in the bottom right here, it says 820. If you look at this one, 822, 820, 821, same group again. So this high took this high. So what does that mean? SMT. So that's another clue that we can tell where price is gonna go, because that's like kind of like, it's not my first. I mean, it's kind of is my first main. Nah, it's not my main or my first, because you could not have that and price will still like do what's doing. But again, so after you see something like that, you're like, all right, cool. Market broke structure on this low. So I have it market structure shift. So market structure shift again means that it's the change. It's a market structure shift. So from going from uptrend, it shifted to a downtrend, as you guys can tell. So you guys will learn this. So there was a breaker block right here. This is powerful. Breaker blocks are one of my favorite things to use in the markets. It's like, if you keep it simple, look how much price respected it. See how the candles went up here, and but never closed above this. If market close, if the one of these candles closed above this, meaning like, if how do I can I draw on this shit? I wish there was a better way to show you guys, but meaning, say if this candle, how do I explain this for you guys to understand? Basically, it's wicking. Again, bodies to the story. Remember I told you guys this is the body right here. This white rectangle, that's the body. If the body closed up here, meaning if like, say if the box was like this, say the box was this small, and this candle closed above it. See how it just didn't wick, but the body was like above it and it closed. I wouldn't have liked it. I would have been like, oh, it's kind of like, doesn't make me feel too comfortable about the way the market's moving. But so it didn't. So price respected it, hit it once, hit it twice, hit it three times, and went down. So we obviously know this is a strong level. So the good thing about telling where the market's gonna go is you can always tell where market's gonna go by old lows and old highs. So see how this is an old low, and price respected this old low. Like, price reacts off old lows and old highs. So let me show you. So I'm just regularly drawing. Price will always respect old lows and old highs. So see how price broke this lower here, reacted off it, went down, broke it again, and it reacted off it and went down. So that's a good way to tell, like a point of interest basically. That's basically a point of interest where you want to pay attention to. Um, so yeah. So you can see right here, it likes to recycle. I guess you can say it's gonna recycle old lows and old highs. Basically, where price has been, it's gonna want to go again, but maybe in the future and maybe in another way. So basically, that's what I mean. So price up down up down. This low, price is respecting it. But again, it's the 1 minute, so it's not gonna be as clean as you'd like it to be. But so what you could have done, since you've seen SMT right here, a market structure shift, and one thing I like to do too that I really like to use is really powerful is the SMT divergence. I mean SMT divergence, a standard deviation. So it's basically a projection tool where you can understand where market's gonna go, and I bet you it respected this shit perfect. Yep. See, I didn't even know it did because I didn't even have that marked. But so the smart money reversals I told you guys about that we pay attention to. So these, to understand when price is reversing, this thing right here, when price breaks 2 points, so it broke the high, so that means this is a protected low, meaning if you see this low broken, then you will maybe see a market structure shift and see wherever price wants to go next. So see how it broke. It took 2 points of liquidity. So it took this liquidity on the top. So again, highs and lows are liquidity. So it took this low liquidity, took this high liquidity. So those are like, again, I said like, like a market shift, like a liquidity sweep. I forgot what another word was for it, but a smart money reversal. That's what it's called. Smart money reversal. That's what it's called. SMR. Smart money reversal. If you have taken notes again, write that down. Smart money reversal is key. Put a star next to it. Put whatever you want, whatever your notes are. But these are important, super important, because again, that's how you tell when the market's going to shift. And whenever you see those, you can use this projection tool to target areas in a trade. So what you do, let me draw it again. So what you do is you mark the first leg. So the leg means like this first move up. You mark that leg, and majority of the time, price is always gonna hit this 2.2.5. So the negative 2.5 is like obviously this two. This if I draw a box around it, these two lines right here are the 2 by 2.5. So price always loves to touch those. And you'll see a lot of the times price will respect the 4 to a T. You can use the 4 for a projection, like as in then your trade go all the way down there, but it's kind of like more risky because you don't know. But you can see right here, so you could enter it right here because you know that one of these highs is protected because the SMT. So whatever you feel comfortable with, you could have shorted, meaning entered a trade right here, put your stop loss above this high. It would have danced around a little bit and targeted this thing right here. So this is a 3 risk to reward. So this is the perfect trade that you want to enter. And again, like this is just minuscule. So say if you're like again like we use higher time frame confluences. So since remember prices are reacting off the 1 hour for rally gap in the longer time frame. So again we go to the 1 hour. Let me just make this bigger. So again, prices are reacting off this 1 hour from the bigger time frame. So when you go to the 1 minute and you see this, it just makes it so much more better because then you can target this lower here, and then this trade becomes already like a fucking huge. If you take this trade once a week, bro, you're good for the fucking week. Because if you're risking 1,000, you're making, and this is a 8 risk to reward, you're making 8,000 on one trade. That's like fucking insane. This is the trade you shoot for every single time, and I'm glad that today's an example because I have this longest video and you guys could learn a lot. But and look at, see how these prices are pretty. See how these lows are pretty equal. See how this low and this low are pretty equal. Again, those are like prices are gonna want to shoot toward those. Shoot towards those. Again, like I told you guys earlier, price shot with a lot of momentum. Again, easy trade, easy fucking trade. But yeah, so that's basically. I mean, this basically turned from what it does today to like a learning session because this is not what this was meant to be. But I guess I'm glad. Again, I told you guys I like to learn. Hopefully, you guys watch this whole video. But again, so since we're in a downtrend, we know price. If we go back to the 1 hourly, the 1 hour, we know price is gonna want to take maybe this low. Oh, I forgot to mark this though. So this is basically triple equal lows. Cause remember I told you guys, those lows are equal. This low and this low. This low is basically such a huge point in liquidity. Like it's like holy shit. Like this is an easy target. But since we're in a downtrend again, you basically know prices. You're testing yourself that this is gonna be the reversal. Cause look at it. A lot of these times the market's moving up and down, and you can just tell. It's kind of like intuition, I guess you could say. But we're gonna go back to what we were saying. Downtrend. So we can target some of these lows because again, lows are liquidity. There's money. There's money being made down there. Or there's where can I put the dollar signs? Let's see if I have one. Give me a second. Give me a second. Oh, I know I can do. Text. So under these lows is money. So again, the banks want these people's money. So it's gonna come take these. It's gonna come take these and run away with it, and people are gonna lose money and they're gonna be pissed. But it doesn't matter because the money. This is basically how the market moves. It wants your money. So there's money underneath these lows. So obviously the market's gonna clear out these lows. The banks especially because a lot of exchanges and a lot of big bank firms this is how they move the market. This move right here was a bank move. Just because how big this was, how big the sell-off was, this was basically the banks and big money, institutional money were definitely in the market at this time. So imagine if you're in the market at this time because once they sell, they're selling millions of dollars worth of it. So if you're selling $1 million worth of anything, it's obviously gonna have a big fucking drop. You know what I mean? So again, yeah. So like, let's go back to the 1 minute and look. If price took this low, and let's see if it takes this low. I don't know. Maybe it did. Maybe it didn't. Oh, yep. See, look. If you like again, like this is such a perfect setup because you could have made so much fucking money on this shit. Again, if we took the same trade, put our stop underneath this low, and say if we know prices are gonna run down fucking insane, and you know prices, so this is the same stop, remember? Because there's the SMT right here. I don't know why I deleted it, but remember, there's still an SMT right here. So that means we don't want to see price come up here. So all this is probability. You're either gonna win or lose. Only two things can happen when you're winning or when you're in a trade, or three things: win, lose, or break even. But yeah. So look, imagine if you held this trade. Like I saw this shit. Well, I didn't see this exact thing in the morning, but I saw it when I was down here because again I trade at 9:30. So 9:30, price already took this low. So this was kind of too late for me because once price takes a low, it gets kind of like, for me personally, I don't like to short after that. Like if price went like this, if it was more cleaner, again price is fractal. If price went up here and did this, and then boom, gave me my smart money reversal, then for sure I would entered easy, easy fucking trade. Entered right here and targeted the rest of these lows. But price kind of stayed kind of too low, and it still touched this gap right here. But again, like I need it to be clean. Like you're not in the market to make money. You're in the market for building good habits. Obviously, you're in the market to make money, but you want the best possible setup. You want high probability. You don't want to drive in the basket when there's three motherfuckers down there. You want to drive in the basket when it's clear and you know what the fuck's gonna happen. But look at this. This is a 1 to 16, bro. You risk 1,000, you're making 16,000. Again, not a lot of people are gonna do this. I don't suggest. Like actually, people do this, but I don't really. I've never had to trade this much because like I don't want to be selfish or greedy. This I'm not saying this is the definition of greedy because when you're like a good trader, like you're probably gonna do this. But I like to take my easy swings. I'm fine with making fucking, if I'm risking 500, I'm making 4,000. You know what I mean? I'm fine with those odds because this is when emotion gets played in. Imagine if you're in this exact movement and you're seeing this candle wicket right here, and you're like, you see it go up. So let's say you're risking 1,000 to make 8,000. Right here, you're up 8,000. Then once price comes right here, you're only at 5,000. Still a lot of money, but again, you're just at 8,000. So you don't want to see price continue to go up where you're at 2,000. You're like, bro, I just had 8,000. Like, why would I do that? There's a lot of emotions that tie into it. It gets kind of complicated. You guys will feel it eventually when you guys start trading. But yeah, this was a really clean day. I'm really glad that this happened, so I could show you guys like how it moved. And you can even catch another trade. Like once price comes all the way down here, I'm kind of like, all right, I'm done because there's something I use called morning. I don't use it all the time, but it's like morning objective. Once price takes like an objective that it's so hard after to do, I don't really want to trade no more because it's like, all right, like this kind of gets kind of risky. Like it's maybe not clean price movement, and it took this low too. If you see, like price is dumped. You don't see a lot of days like this, but there's for sure a lot of days like this where you can make fat money, and it just makes a lot of sense. So yeah, so that's basically today, how today moved. Um, if you guys have questions, hit me up. Yeah, but doses.